All right, so the recording is now going. This is we're going to do a member webinar. Apple should be out in a few minutes. It's 4:27, so we got about 3 minutes till Apple comes out. Just going over the Devon results, which were pretty good. Anybody else long Devon still the October calls? This thing worked out really well, I have to say. We'll see where it opens tomorrow, but just in general, we saw a whole bunch of May calls. The May calls worked really well. Then we saw October calls, really gave me a nice incentive to get out of the May calls and into a longer term position. And Devon is sitting right at the 200-day moving average now, so I think pretty good. Pretty good. Let's see. I feel like I'm gonna get a couple of those screen shares. Let's go while we're waiting for Apple. Let's go ahead and go through a couple names. Snap. I think MQ. I think he played it to the short side, so I think this works. By the way, all the earnings channels are in. Excuse me. All the earnings trades are in the earnings channel. So I did not play Apple. I just kind of wanted to see. If I had to guess, I would have gone long Apple. I think there's enough bad news priced into the stock. What did he do? He bought the put spread. So bear put spread earnings tonight. Perfect. Yeah, it was a 6.3% move for Devon. So that's not cheap. So that's why I think I was able to get away with selling a little bit premium. The only thing I did was Zoetis, which reports tomorrow. And nice. By the way, I'm being long DVN. Pretty good history for Zoetis. Positive the last couple quarters. Not every quarter has worked, but I think more green in there than red. We'll see how that. So I gave that a small shot. So we got should be just about a minute. So let me get rid of this. Let me get rid of Slack, and we'll bring up Apple. Juniper also reported earnings. We saw some calls go up right before the end of the day, and Juniper looks like that one's up nicely. Zen's still up. Gilead down. And we'll go over Apple. All right. And Apple will do this. Apple will move up a little bit or down, considering they've got a ways to report. I just want to see the chart really quick for Apple as we're waiting. Should be just about 10 seconds. Yeah, I mean, I probably would have tried going long as well. Although I did not play it. I think they've talked about it. Let's see, reports. Revenue, 51, that's third quarter revenue. Looks like is going to beat expectations. Let's see, we got a whole bunch of stuff coming up. There's Yum China, they're out as well. All right, let me bring up the specific news for Apple because these headlines go by so quick. Yeah, $100 billion buyback plan. There goes a VPOC up there, taken out. And still going higher. So we get, $100 billion buyback program. $100 billion buyback program. Boost dividend by 16%. 51 to 53.5 guidance versus estimated 50. So this looks, again, really strong, I would say. Let's see, iPhone units sold a touch under expectations, 52.2 million versus 52.3. But again, the guidance is super strong. Big old buyback plan. Revenue, crushed revenue. Well, I wouldn't say crushed, but I just look at this overall number. $61.1 billion versus 60.9. I don't know if I've ever seen such a big buyback plan before. $100 billion, $100 trillion. Just kidding. Yeah. So there you go. And boost dividend as well. But yeah, the guidance again, the guidance was supposed to be estimated 51.4 billion. Look at what they're showing for guidance, right? That's always, the buyback plan helps, but it's always what they're expecting for the next quarter, not so much even what they did for the iPhone sales in the past. you know, that's good for cocktail parties. Whoa, how many iPhones did they sell? But it's really it's really the guidance that counts, and of course what they say on the earnings call. So it seems like this happens every quarter, and everybody scares the bejesus. Think about all the analysts that have been wrong. Skyworks is up. Cirrus Logic, Corvo is up. You know, maybe that's why they were buying Lamb research calls. I don't know. I don't know if Lamb, but you could see it is getting a lift here. The semis, by the way, acted really well today. They were your best performing group, I think. Yeah, they were up 1.6%, by the way. So I don't. Maybe somebody knew something because that by far the SMH was up 1.6%. The next best performing sector was around 1.2 and a half, 1.3%. Anybody go long, by the way, Apple? But you know, the analysts, they scare everybody to death about about their numbers, and they've got it wrong now a couple times. Went through the same BS the last time, the last quarter. So they're most of these guys are wrong. Kudos to, I think, DA Davidson, who put out a buy rating on this, initiated them in a buy. Yeah, really, really strong. So let's see if we have any more of those purple lines up there. Notice I've got there should be, I would think, another one possibly someplace. Yeah, you got another one up here at once. It looks like we just touched it. Apple CFO company has over 270 million paid subscribers. Wow. Up 100 million year over year. Really nice quarter. All right, any questions? We will go on. Anybody want me to look at any other earnings? If not, we will go on and talk about some technicals. Crude, the API, it is Tuesday, so the crude API report just came out. Amazon's higher on it. Good. I'm long Amazon. I tell you, I think that's you know, I'm really going to try to do that a little bit more often. I feel like I have not traded Amazon enough. I think it's one name that you know, you want to really stick, especially if we've got choppy market conditions. I really want to go to where the the best performers are in the market, rather than mess around with a bunch of names that I think might be a little bit more challenged. So let's go ahead and let's go over some of the things that I want to go over. If my TV's too loud, please let me know. I've got CNBC in the background, but so I think that's a good sign. So this is so what I wanted to go over, and I think it's probably a good idea every beginning of the month to do a webinar. And if I forget to do that, please let me do it. But the reason why is we get a whole new value area to kind of work off of. So you know, I've gotten a lot of questions as I've gotten some traders purchase the value area indicator over the course of the last month, and they've asked me. They said, "Hey, you know, do you have a webinar on it?" Which I do, but it's a little bit outdated. You can see S&P also rallying. Keep in mind, Apple's the biggest weight in just about everything. But I figured it's a good time to kind of just go over an explanation. And again, since we have, um, you know, we're now in a new month and we've got a new value area, uh, good to go over those levels. and explain just basically what it is, because and you know, any new members, by the way, I'm happy to get on the phone and just kind of give you just a quick overview of kind of what we do on a day-to-day basis, as well as some of the indicators that I look at, some of the things that I've got on my charts, why I've got them on my charts, but all in all, just a quick rundown of the trading room and so on and so forth. So keep that in mind. I'm always happy to have a conversation with members just to kind of go over whatever they want to. The value. I just had a call with someone about the value area and the value areas and how they work and how they're beneficial. So let's just overview quickly what they are. And also let's talk about the May value area for the S&P. So why they're really useful. So first of all, what are they? The value area now this is what the May value area is, and it's based on this volume profile of what we did in April. So you could see that it's a pretty, and you could see just by the naked eye, the range was pretty tight, comparatively to what we did, back in here, for example. This was what the March value area was very wide, and that's because of the range that we traded in. So the bigger the range over a month, the bigger the next month's value area will be. Notice also that it was pretty wide for the April value area as well. We did, not as big as the previous month, but still pretty wide. So this one, we kind of came in a little bit, and it's still pretty wide historically. Look at the value areas for the past month, past months. They were pretty narrow, right? I mean, maybe like, between a third and a half of the size of this month. So it's still pretty, even though it's narrower than the previous few months, it's still pretty wide. It's still wider than what we saw in 2017, right? And that kind of makes sense. Volatility has been much higher than what we saw in 2017. So again, this kind of puts it in perspective. Look at how narrow these were. And also look at the volatility, just to put things in perspective, like how much we're moving comparatively to what we did in for the majority of 2017. Just much bigger days ranges that we're dealing with. All right, so I wanted to make sure just the picture of how that looks relative to previous value areas. But the takeaway from this is kind of the indecision, or a lot of indecision right now, and I call it the make or break month. We're starting right in the middle of the month. It is, like I said, we don't have far to go to get to the top of value or to get to the bottom of value. Notice as well, and I do like when the value areas line up with the moving averages. You got the 200-day moving average coming into the bottom of value as well. So that might provide a little bit more support than usual, being that both of these things are lining up together. But if we start to break, and I'll talk about the bad first, because I always believe that the best traders are they're always worried about the risk before the return, right? You always want to worry about what could go wrong, unless you don't have many trades on. But I have trades on, and that's something that I'm always going to be worried about. So 26.13. So what happens if we break this? Now, the first thing is that the 200-day moving average has been rising, right? So it's becoming a higher bar. It's when we touched the 200-day moving average back in February. This was, we weren't there long. It was basically just an intraday touch. One question: we touched the 200. Did we touch the 200-day moving average? I don't know. Probably not when you factor in dividends. I don't think we did. but we came pretty darn near close. Let's just see what this looks like dividend adjusted. So dividend adjusted, this is what SPY looks like. Keep in mind, on my thicker swim charts, I do not have dividend adjusted charts. So, we haven't if you factor dividends in. It's a little bit different picture. But, so even back when we touched the 200-day moving average in the beginning of April, we had one close below it. But, so we are higher. So it's becoming a higher bar. The other thing to notice is that this downward trend line, which we've had some difficulty breaking, is also starting to come in. So something's going to happen here, I would say, in this month, whether we break to the upside or we break below. If we break below, I mean, just to kind of fast forward, let's say that we do slight fade now. In Apple, I would assume. Let's say we do break this. I would say then the next thing that you're going to look at is probably this level here. And I think that might be a minor speed bump. What jumps out at me off the page is this 2500 level. So I'm not saying that we're going to hit that. The other, so again, these purple lines, what are they? They're virgin point of controls. It's really, I do find them very important. Look at how many we took out the last time we went down and then we reverted. A lot of times what happens when there's not one right behind another is when we're outside of the range. And again, it's not really, either one of these are not important right now until we actually get above value or below value. Once we're in value, they really don't become, they're not really at play. But if we start to break below, notice this has been active for a while and we did not break it here either. We did not get down there. But I just have a feeling that at some point, if we do break it, this is going to come into play. So again, what are these? Why do these purple lines exist? They exist because it's a virgin point of control. It's a point of control, which is the yellow lines that has not been touched before. Right? If the price goes through them, like here, they're no longer. We're not going to draw a purple line here automatically because the price is already filled. It's kind of like a gap. It's the same concept of some people look at gaps and whether or not you fill a gap. It's kind of like thinking about it in terms of like an unfilled gap. So once price returns, you kind of fill the gap. It's a very similar concept. So not the same, but similar. So once they get hit, then they become fulfilled, which happened over here. So what's the percentage down here? If you quickly calculate, so I would even take it from the 2613 level because really I think that's when it comes into play. So 2613 minus 25, let's call it 25, it is right around 2500, is 113 points. Divide that by 2613. And you're talking about a 4.3% move. All right, so that's what you would have to worry about if this 2613 gets violated and we start breaking below it. About a 4% move, air pocket, I think, to 2500. So what will I be doing if that? So the point of this is, and I'm going to go, this is just the S&P. I'm going to go through NASDAQ and IWM, but I want to spend some time on this because I think it's probably the most important thing I want to go over. But so what are we going to do if we start to break this 2613? I think a couple different things. I think I will probably be exiting some trades. I'll be moving more to cash and doing more scalp trades, right? A little bit more trades where, we see a call buyer in the beginning of the day, and then I may follow it, and then I'll get out at the end of the day. At least a good portion of it, right? Being really disciplined like that. And then getting out of a lot of swing trades and really having a bigger cash position. Because if we do get down here, I mean, the other thing is I could also buy some puts. I'll probably buy some S&P puts if that happens. Another thing that you can do as well as maybe sell some S&P call spreads and collect a little bit of premium. All right, so these are all things that you kind of want to write down, if so that you're ready, because you don't want to start thinking about this when it happens. What's going to happen if you don't plan ahead and we break? Let's say we break. Yeah, we're at like 2,600. You're going to be running on emotions. You're going to be, oh my God, we're breaking down. We just broke the 200-day moving average. What am I going to do? And then you start making decisions more emotionally than you would right now. Right now things are calm. So it's better to prepare, I think, so that you have a game plan. Now, when things are somewhat calm, even though today was all over the place, and I love the fact that we came back today. But the way this market is going, I kind of chalk this up to anything could go, anything could happen right now. So so you want to be prepared for these outcomes. So get a piece of write a piece of paper about what you want to, and have it like in my notebook I've got like a binder. Go go past a few pages, because you hear me flipping the pages now. Go through, go 5 pages ahead and have a plan. What if we break 2,600 in S&P futures? And of course have an alert. And then the best thing that you could do is follow your plan. If that happens, then you're not shocked. You're kind of ready for it. But I will probably be buying some S&P puts. Probably a little bit out of the money. Maybe let's say we break this next week. Again, I hate to kind of go through the scenario because that's not what I want to happen. But again, I want to think about what I'm going to do now. So if we break this let's say next week we break this, I'll probably be looking at S&P maybe June, and I can even do it in a put spread as well. I could buy some outright puts, probably something, about 2 or 3% out of the money, maybe the 2,500, or if you look at SPY, if you're more comfortable trading this, but index puts I think have a better tax, have a better, are treated more favorably tax wise, but maybe something like the 254, 250, 255, or even maybe 256. So a little bit out of the money. So again, this is not that far away. 4%, I'm sorry to say, is not that far away. If we break that. All right, so that's my plan, is to just go ahead and unwind. A lot of trades, my book of trades that I've got on, which are, by the way, not that large at this point. A lot of what I've been trading, you've been seeing me kind of reduce my size into this. I think it's, if we continue to chop around like this, let's say again, another scenario is we go through the whole month and stay in value. It's going to be very difficult to make a lot of money on either short trades or long trades. So you've got to be prepared for that as well. And the length or the duration of your trades, right? So if you're holding, first of all, May, if you're holding, it's a really a good time to again go through your book now and say, what am I holding? How many May trades at this point, right? We only have, this is always important to do, by the way. Let's see, CDR. Whoops, that's CF. All right, so today's the first of the month. It's always good to figure out, because this always sneaks up on me. I am not the best planner. You could ask my girlfriend about this. I am not the best planner. Just I think guys in general are not good at planning. I th- I think sorry to be, I guess, sexist a little bit, but I think girls are much better than guys in terms of planning. We do a really bad job. So look at your calendar. You only have one, two, three, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. You only have lucky 13. You only have 13 more days in May. If you are still holding May swing trades, it's unless we go right to the direction that you're looking at going at. Um, what do we know about? And I'll let you guys respond. What do we know about front month options now that we have 3 weeks, or not even 3 weeks? What happens in front month options where it's greater than any other month? Do, 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 do. Not so much. Yeah, backwardation, but decay, theta decay, right? If you're holding May options at this point that expire in 13 days, this is when you have the biggest theta decay. And you could just Google theta. I'm not going to bring up the theta decay. I talked about that in the last webinar we did. But just Google theta decay diagram, and you'll see that one thing that we know is that for certain is that this is the front month options, meaning May expiration options, will have the biggest theta decay versus any other month. Not tooth decay. That's something different. That's something. Never mind. So just that's why I just said just go through your book, because now you have the opportunity to kind of roll these things out. You could roll them to June. Even I'm looking at any positions that I've got left that are not like lotto plays. Yeah, I mean, you could put on short-term plays, but my rule is at this point, if you're playing with May, you're basically risking. You have to be comfortable with losing all the premium in those trades. You really have no recourse if the stock goes the other way. Looks like Yum China is down big. I would have went long that name too. So I'm rolling not only to June but to July and August, and really taking some newer positions. I want to make sure I've got plenty of time. Like I've got Devon Energy on right now. That's an October position. I've got Yandex on. That's a August position. So some of my trades that I want to hold for more than a few days, I've got time built into them. All right, so that's number one. And start going through, because that's one of the outcomes that we could have for a little bit, is that we chop inside. If we were above value, if we started the month above value, then I would say different story. Then I would say, okay, well, not completely, but I would say, hey, maybe you've got a chance. And that's basically how the value areas work. Once, as a buy signal using the value areas is once we start to get above value. And then you want to let your red line be your stop. Somebody was asking me about the yellow line. The yellow line is not really a signal trade. It's not a line to put on a trade. I know there was a question today. Do I put on a trade at the yellow line? No. If if you are using the value areas, all the yellow line will tell you for this month or this value area period is just where there's a lot of volume. And you could see right on this volume profile, it's the peak. It's not always the peak, because it's basically, you're looking at a non-normal distribution. But a lot of times, it's going to be close to the peak where the volume was at price. Again, everything that we're looking at with everything that we're looking at. I don't know why there's not volume on my S&P futures. I guess I forgot to save that. But everything that we're looking at with the value areas again is volume at price. The theory here is that there's a memory behind price. Again, not the volume over time, which is on the bottom, but the volume at specific price. So, sometimes we do see kind of a pause or consolidation, which is basically right where we are in the value area on the yellow line, but it's not a signal to take a trade. A signal to take a trade is basically, unfortunately, to kind of wait. If you're on the bottom of the value area and you just get in and you want to play from bottom to top, that's another trade to play for, or at least take a target at the point of control. But really, you don't want to be initiating trades at the yellow line. You want to wait until you've got a break. Again, we stayed basically in value all April, besides moving to the downside. So again, we're dealing with a much narrower value area. So I think for the most part, and of course, you're going to analyze this on a case-by-case basis with individual names, but 2685, if we break that, then you're going to have to contend with this VPOC up here, which is pretty shallow, which is not that far up there. But that would be another place to take targets. I mean, keep in mind we've had all this overhead resistance. So again, this is one that has not been touched. So, have a plan for that too. But I think, more than anything else, have a plan on what you're going to do if things really start to break down. What else did so I went over the percentage change for the move down. I'm going to talk a little bit about the meeting for tomorrow. They're expecting, let's see if this has changed at all. There's 35% of chance of a rate hike tomorrow. Again, which is really unusual going into the meeting, that usually it's kind of known already. So that's what we're contending with. So the one thing that I'm a little bit, I'm just going to talk about this for 2 minutes, and then I want to get on to the Nasdaq and the Russell small caps, to go over those value areas as well. But before we do that, we've got the meeting tomorrow. So as you can see, if they don't do anything tomorrow, they're pretty much pricing in a rate hike in a month away in June. So we'll have to see how that goes. One of the things that I was looking at before is the last meeting that we had. The usual behavior for the VIX and for volatility. So this doesn't exactly give me a warm and fuzzy feeling. But normally what happens when you have a big event, like a Fed meeting, is volatility will rise into an event. And then once the event becomes known, then there's usually like a volatility crush, because the cat's out of the bag in terms of news, right? Everybody's anticipating what the news is going to be. That's the minutes. When was the last meeting? Did I go by it? Here it is. So 321. So what concerns me a little bit is like volatility went down pretty hard today. And I believe we saw this the last time. It was either that Powell was speaking or it was the last meeting where volatility did the same thing. It finished lower on the day, which is not normal. Normally we do what we did this morning, where this is the VIX, by the way, in the 5-minute bar, where the VIX will ramp into the FOMC meeting as anticipation builds. So the fact that we're selling off, I'm wondering if this was more of a short covering rally than long money being put to work. Don't know. Too early to tell that. But I'm a little bit worried. I'm always worried. But I'm a little bit worried that this was a short covering rally. So if we look at the VIX on the last meeting, so again, that was on, so let's say 320, 321, and let's see what the VIX did on that day. Maybe I'm wrong. This was 320, so I don't think, maybe I'm thinking of a different time. But this is what happened after the meeting. We, on 322, After they raised interest rates, it was ramp city in the VIX. All right, so which is again unusual. What normally happens is volatility rises into an event, and once the event becomes known, then you see the volatility sell off. So we did this kind of thing, this herky jerky stuff, right before the last Fed meeting in the VIX. So and then the VIX went nuts on 322, opened at 18 and closed at 23. So again, why am I going over this? Because there may be a little bit of a pattern here, and that troubles me. Because what happened last month was the VIX. Yeah, I mean the VIX did sell off. It looks like we reached a high on 319, and we closed lower the next couple days. So it seems like there was some short covering ahead of the last FOMC meeting. And then once the decision came out, the shorts reasserted themselves. And we stayed kind of in that higher volatility predicament for a little while. 322. Yeah, that was the next day. Right, it was 321. So same thing. We'll look at this on here. Yeah, I mean here's 320. Here's 321. Right, we were going higher. I mean, do you guys remember this, right? Just so that I don't see anybody talking in the chat, so I just want to make sure. But we did this this was the last FOMC 321. We were up here prior to the meeting, and we sold off. We finished lower than the open, right? You have a red bar because you finished lower than the open. And then the next day, which was Thursday, the market got absolutely annihilated. The day after the last Fed meeting. And it continued on Friday. Thursday and Friday were really bad. That's why I remember it. So you have to be a little bit prepared for that. So what will be the signals tomorrow? If we rally in the morning going into this Fed meeting, again, every meeting is different. So I'm not trying to scare the bejesus out of everybody. But you got to be a little bit prepared for this. If we did this last time, I'm not saying that this is going to happen tomorrow, but you got to be prepared for it. So what would be the warning? And I'll talk about this. You know, the Fed meeting isn't until 2 o'clock tomorrow, so you know we'll have time to talk about it midday. But if we start to rally going into this meeting, that's not going to be the best sign, in my opinion. It's going to be, so we want to watch out for this tomorrow, where we rally in the morning and we close lower than the open. And again, like I said, on Thursday and Friday, the shorts were in major control. And so what did we do on 322? Now we can, there's trades that we could do for this. Yeah, we were down, we went down 4%. So anyway, that 4% would get us down to here. That's a 4% that, from here. If something like that repeats. But again, that's how quickly in this market 4% could happen. It happened in 2 days last time around. So if you're a little bit worried about that, tomorrow at 2 o'clock, 1 o'clock, you could buy some SPY puts. Maybe go a little bit out of the money. Don't spend a lot of money, just so you have a little bit of portfolio insurance. So again, why I'm going over this is so that we're not in the moment when when price starts to move really quick, and if you don't have a plan, if you haven't thought about it ahead of time, you make bad decisions most of the time. You don't always make bad decisions, but you have a higher probability of making bad decisions in a high stress environment. You guys are great. I always, I try not to do too much when the market's selling off really hard. I would like to be prepared for it. All right. So again, I hope this doesn't happen. But I mean, I usually do a Fed trade. I usually do a GDX strangle. Is usually my trade for Fed day because gold always seems to move a lot. Last Fed meeting, it ended up being a small winner. It was not a huge winner, but it did work. So maybe I just buy some SPY puts. All right, so let's go over the Qs. Any questions so far? I see everybody's very quiet tonight. Let's go over the Q. We can look at the Qs. We can look at Nasdaq futures. Wait for this to come up here on Thinkorswim, which has been slow for me all day long. So same thing. I mean, this is pretty good, and I'm going to go over some sectors too, pretty quickly. But it looks like we're also in value. We're close. We're close to breaking out. This would be lovely. I would like nothing more than that. So again, I'm not getting bearish this market. I'm just coming up with a plan. My position is positioned is bullish. I'm positioned bullish that way. Somebody asked me earlier that, are you always so bearish? No, I'm just, we're just kind of, noticing what's been going on with the price action. So we're close to breaking out and getting to the top of value. So how would you trade this if you're using the value areas? You would wait for a breakout and maybe shoot for a target up here in the Qs. But I like the fact that we're getting closer. I would rather have the price on the higher side of the value area than on the lower at this point. Let's see what the Qs are doing here at post market. So we're up a little bit. So what has Apple come in? Is that what's going on? So notice so here's a good example, and Apple's really good. If we want to talk about VPOX for a minute, but I think this is pretty close. This is close enough to being taken out, and then sometimes you see a little bit of a reversion. Notice there was one down here. So here's a good example. So look at the VPOX, and you could do this in any chart, by the way. You don't need me to. Oh, sorry, I need to put the different time frame. There's so many VPOX for Apple. You actually have to use a smaller time frame. You can't use the 20. Do I have another daily? I don't. So let me just customize. This one you only want 10 years. There is a little bit of a limitation. Add time frame, and I want 10 years. There's a little bit of a limitation with Thinkorswim, is that they have a memory issue. So I want daily and 10 years rather than 20. Why? Because there's too much history. Yeah, I'll look at both of those. So what do we got? Let's see if this registered. Oh, I gotta go to this one. But look at the VPOX. So this is standard. This is pretty standard for looking at how to play VPOX and how you can kind of trade these. Right? Once you hit the VPOC, a lot of times if there isn't another one behind it, you will see a reversion. So we took this one out, not always right away. I mean, this actually went lower, much lower, intraday, but then it climbed up. We did the same thing here too. And I think I did put on a trade to profit from that. I think I sold some put spreads, which is one of my favorite trades to do that after you have a big sell-off. And you take out a level. So again, it took, similar to this, it took about a week for it to kind of get itself right. But really good to kind of look at. Okay, so let me finish up. I'm going to go into sectors in a minute. So the Qs, I think we covered that. There is one down here as well, but we're actually on the upside of this VPOC, so hopefully we don't have to worry about that. But I think a similar story to S&P. There's one that lives down here at 147. I don't think you have to. Again, they don't become active really until you get outside below the value area. IWM, what did IWM finish today? Oh, IWM finished had a nice reversal today too. I didn't wasn't really looking at it, but kind of same thing. So here's a good one, right? Look at this VPOC that was taken out. So again, reversal. And here's a pretty good example of what I was saying. You had one here, and you had one behind it. So sometimes if you have one consecutive, like pretty close to it, I don't really have a way of telling. Like this one, we didn't go down and hit for whatever reason. But the second one, maybe it was too far away, thankfully. But intraday, we took this thing out, and that was the low point. So again, sometimes price seeks them out, and you have a complete reversion afterwards. It's not always the case. You know, sometimes price can get above it and keep going. But there was one here as well that was taken out. We went higher a couple days, even red bars, and jumped back down. So again, if you go back to the Qs, you know, we hit this. Take a target, in my opinion. You know, or start taking some targets in your tech portfolio if we go up and we hit this. Sometimes we could power through, but at least take some money off the table. And I think overall, with your with any of your trades, especially option trades, you have to take profits in this chop fest that we got going on. That lower VPOC on it was printed, calculated from the previous month. So it was calculated from another time frame, not the previous month, a previous month, not the previous month. So any time that price does not goes through a value area like this, like so we started, what was this, August or no, September. We started above value, right? So this is the value area for the month back in August. We started above it and we just kept going higher. So this became unfilled. We never even spent a day inside the value area. So being that we never went through this value area at all and we never revisited it, it's going to stay active. And again, I know I've said this now 3 or 4 times, but it really doesn't come into play until we get really far down here. Like if we were to get to 142, I would say this thing will start pulling it down. Because if you think about it intuitively, right? I mean, you're trading way out of a range than you normally have. And it tries to, like, almost like artificial intelligence. Maybe that's not the right phrase to use in this time frame. But it's almost like price is going to try to get back to where there was a lot of buying and selling previously. It's going to try to seek out a familiar level. Especially when things start moving quickly. Right? So this one's gone. This one's, you know. I will try to give you, I'll give you one other example. I'm going to leave this small cap chart for now. But basically, we're right in the middle of the value area. So we really can't tell anything right now until we break to one side or another. And really, like intuitively, I would say with the price all like inside the value area, that indicates chop. It does not indicate trend. Once we're above, so if we go back to 2017, right? That's a trend. We're starting the month above value. That's a great indicator, by the way. When we start the month above value, like we did back here, look at what we did. We also started the month above value, maybe a little bit too far ahead. This was after a huge rally. I mean, we really got overbought. We really got overbought in October. So I think that's a little bit different. But, once we're above, there's usually good things that happen. Once you start the month in value, you got to wait until the direction is determined. Otherwise, it's just chop. So there's something really to be said about where you start for the month and about being patient until you get a signal that we're going to get out. I mean, I honestly think right now you could flip a coin. I mean, we're right in the middle of the value area. I think anything could happen at this point. Do I want it to go higher? Do I want price to go higher? Sure. But we're right damn in the middle of this thing. If we had a breakout above the red line and there is no VPOC, is there a good chance price will pull back to value area? No. I mean, so these are not the end all and be all. You don't have to have a VPOC. When we're making new highs, when we're making new highs like we did here, it's not, you didn't have a return of value here. So you don't have to necessarily wait for that. That can happen. If we go back to the Qs, so there is a VPOC up here, which is kind of a bad example. But let's say there wasn't for a minute. Let's say we do get outside of value. Sure, one buy. You could either A, go long on the break of the red line, or there is sometimes a check back. So sometimes we break and we retest, and then we go like that. Doesn't always happen. Here it didn't work. This was a false breakout. We went higher, came in, and we broke. We broke back in. But this would have been your stop. Fortunately, well, I don't know if it was not. If you look at the futures, you're not going to see a break. But really, that should have been your stop. Once we're above value and we drift back in, like, get out. Because that's a false move higher. So again, all this stuff, and just like any other indicator, no indicator is predictive. You just have to honor, if you're going to use it, you have to honor what it tells you, what it's telling you. And I know, everybody has a certain indicator that they like or they use. None of this is predictive. It just gives you kind of a good look at, what the trend is, and really good support and resistance levels. That's basically how I use them. And I use them obviously in conjunction with the value areas. And I will give you another just look. I promised I would bring up Micron. Micron's got a really good one. If you bring up Micron and this is what got me to take profits. I was in January options in Micron. Just wait for the memory to click here. Should be here. It's not giving it to, there we go. Just sometimes it takes a little while to generate, especially from when there's one long ago. This is pretty much, even though this line is still there, I think you could basically make the case that it's gone. So where is this thing from? This was the high point for Micron, and that's exactly where I took a target. Now I didn't get the tippy top, but how screwed up is that? This is from, you got to go all the way back to what? All the way back here. That was that VPOC from 2000 time. And it stood active all the way until recently. and that's as high as we went in Micron. So this is like a really good example. Just again, I wanted to incorporate a little bit about the value areas and how to use them. Like that was a place to take either a target or the trade off. I took the trade off on this day. Again, I didn't grab the exact high, but I was riding this trend all the way up after we saw monster call buying in here below the. It was below something. I thought it was below the 200, but I guess it was below the 50-day moving average. But I mean, how great is that? And I said it on Twitter. I said it. I was like, I'm taking it off there. That's where. And all along, I said, hey, I'm going to try to see if this thing can get all the way up here. And sure enough, it did. So anyway, that's a great way to kind of use it. Again, it basically worked as a magnet. We went all the way up there. We touched it. We hung around for a little bit, and then we fell apart. All right, so that's there was a couple questions. Can I look at First Solar and Amgen? I was making a guy that I talk to a lot on Twitter, Anthony. What's his last name? It starts with an M, but he was saying how it's called Last Solar. So what I would say, looking at first of all, which I didn't really cover this. Oh, and I wanted to cover this. I'm going to come back to First Solar. Just give me 2 seconds. I wanted to talk about the weekly chart. I've been talking a lot about the daily chart. If by chance we get down there to that VPOC, look at what else is down here. A big support level, 2513. So that 2513 level is again, what's the weekly chart, or what does the weekly chart have? It has the yearly value area. Also, so when we're on the daily chart, those value areas are for each month. The weekly chart has the whole year, right? So these will really act. So again, we started the year in 2017 above value, and look at what we did. We never, notice there's a VPOC down here. We never even got into value for the whole year. What a great year 2017 was. Even back here, once we broke out of value. It looks like we spent some time, but we never really, we had a little bit of a correction here. We had one break into value, one big move for a week, and that was it. And I think that was the election, right? That was the election. But we started the month above value, and we just kept going. So the danger is here. Look at how, the beginning of the year, how far we were above value. So who knows? We might have, if we break that value area on the daily, that 2513, that 25, sorry. That 2513, we might hit this VPOC and then bounce and use that 2513 as support. All right, so even if we break this and we happen to go down, it's going to be horrible. At least we're thinking about a game plan. Hopefully you're writing down some things for things that act like an action plan. But we've got some really good support in here, like right around here on the weekly chart. So again, I don't want to see us break this, but if we do, we've got really good support here. All right. And I think the same thing with NASDAQ. The same thing, we're really at the Qs. We've got some support at 154.28 using the weekly. Again, same pattern. Broke in the beginning of 2017 and never looked back. But tons of consolidation, support at 154.28. I mean, and that's another thing. Like, so if we get down here, again, I hope we don't. But what a great place to sell put spreads. After volatility will be high then, so you'll be able to earn some money on that. So again, things to kind of think about if that happens. selling put spreads. I did that with I was talking about that with Bristol Myers on the weekly chart. This one we cut all the way through the value area very, very quickly, and we found support at the bottom of value on the weekly. All right, so let me go to the other questions about First Solar, and please, by all means, ask questions as we go along. The problem is here on the weekly chart, we don't really have any support for a while. I mean, this is a pretty ugly. This would be known as it looks like an evening star to me, some type of an evening star pattern, right? You've got one bar here, the open of try to go higher, big long tail, and then this week's not over yet. We've got the whole week, but big bearish engulfing candle on the weekly chart. And so for the week, notice that we're starting the month, we're below value. So this to me does not look good. It does not look like a good chart. For me, First Solar is an avoid. If we get back into value, which is not that far away, if we get back into 68.91, then all is not lost. But you could see, besides the value areas, you've got the 5 period crashing below the 20 period moving average. You've got a MACD bearish crossover. So you got a couple things going on here that are not good. I mean, I don't think so. I mean, like I said, I don't think that they're very predictive, as most indicators. There's no predictive indicator that's going to tell you. And I think for earnings, we know anything could happen. I mean, a chart could look awesome going into earnings, and I thought the chart looked pretty good in First Solar, honestly. We went higher one day. I mean, so what I really use, just going into what I use, is I use the value areas, I use moving averages, I use everything down here, the RSI, MACD, and you got to honor your candlestick patterns. When something like this happens, when we try to go higher and we fail, and then the next day you get another bearish, you get even if it would have just covered these two candles, it still would have been ugly. But this all happened so quickly. And that's like the same thing with Match today. There's nothing that's going to tell you in Match. I mean, there's news that hit the tape. I mean, so what it will try to tell you for Match is whether there's support or resistance levels to trade off of. I don't know if there was anything really that good actually in Match today to really trade off of. But yeah, I mean, being you know, and the more like I could tell you about this, I think the better it's going to be for you. But yeah, they're not. Once these things start falling outside of value, I mean, on the 1 hour, I would say once Match broke the 1 hour. I mean, nothing is really there's nothing down here. It doesn't look like I have any support to really go off of. Usually we have some VPOCs down here, but I don't know why we don't. There was a couple on the 5-minute that were taken out. Somebody was saying that there's a third one. I don't see it. These two were taken out. I heard somebody say there was a third one, but I don't see it. And I don't see it here either. This, I would have said, maybe the bottom of value from 2 months ago, but I'm surprised. Yeah, I don't actually have anything. That I would be mindful of this. This just seems like it's free falling. So yeah, I mean, we'll split. So this will be an interesting one to watch. I'm actually long this thing in cash. I didn't do anything with it today. But this thing could go down to 32 really before it hits support. What was the other one that you gave me? Amgen. So let's again start with the weekly chart. I was just talking about how all these big biotech names are not doing well. Went over this last week. So weekly chart. So we're right in the middle of the value area on the weekly chart. So nothing really to go on. You supports all the way down at 160.66. So again, I always start with the weekly chart. Resistance is 180.66. If we go to the daily chart, 200-day moving average acted pretty well here as a clue. Rallied up to the 200-day moving average and could not get over it. We closed below value for the month, so watch that 170.19. Unfortunately, this looks like a short to me. Like I said, it does have support. I forgot what I said. It's got some support at 161.52. So where are we on? Where's that on the daily chart? 161. Yeah, so it's a little bit further down here. I have to say it kind of looks like a short. What you want to happen if you're long is for this to get back above 170.23, but below the 200-day moving average, in my opinion, is not a place to really own a lot of stocks. Once they're in a downtrend, once they cross below the 200-day moving average, they're in a downtrend. And I think that's what you have here. So I personally would not own this stock. And even if it does climb, this is not a fun looking chart. Does this look like a fun looking chart to you? This thing is sideways, all kinds of sideways. Tough. I would say a really tough name. And I've tried playing Amgen over the last couple of years, and I don't have anything on now. I think it's too difficult. But at this point, if I were to take a shot at a long, I would wait until, not even until it gets above value, I would wait until it gets back above, reclaims the 200-day moving average. It's past an hour for the webinar, which I didn't want to go that long. I just wanted to bring up a couple sectors. We'll see what XLI does. You have a hammer bar. Hopefully that puts in a low. And let's see if we can get back into value. But that's not a good sign in my opinion. A couple other sectors we talked about in the trading room. Oh, IGV, I'll bring up that one. XLB also below the materials ETF is also below the 200-day moving average. It's always important to look at the weightings of what that dictates. How much the individual sectors could really impact the whole S&P.